So far, I've just
No,
been
but-
saying the word liquidity. I don't actually know what it means, so this is good.
Well, here's the thing, Christine. I may not know either. All I know is what I interpret it liquidity as works. Like,
Yeah.
I don't really care if it's the real liquidity. They're like, oh, you don't know what liquidity is, bro. I'm like, I don't know. This is what I call it, and I made 40K last month. So
day to day, when I would see that my losses, like I could hold out for an entire loss, right, and it would be bigger than my wins.
I'm starting to understand where you're
like that made a difference to me mentally. Like I found it harder. I found it harder to come to the next day and think, well, even if I take a win, I'm not going to make back my loss from yesterday.
Actually going to cut my size in half, so I'm not just taking on all this extra risk and having $18,000 days. Like I might still have a $9,000 day, but it would be 2 losses.
Or here's another idea: is start marking up your first trade of the day and don't take it. That's what I did for a little while. Why? Your first trades are red all the time.
Like, I gotta take the trade. My fingers are itching. Like I just gotta pull. Like I gotta do it.
Because something you said, Zach, when we were in the live room the other day that really had me thinking was, what percentage of the daily move am I trying to capture?
This is Behind the Charts podcast, where real traders have real conversation.
Back at the podcast, episode 22, joined by Zach Arbuchi. And I'm really excited for this one because I don't know how much you know how much of an impact you've had on my trading. Because like when we first went into the ASFX, like crew, everyone trades VWAP and futures and yada yada. And you were always here winning, doing your thing, but like totally individual, your own sense of self, like not following the rest, specifically like not following the herd mentality. And that's like how it seemed. And people would give you shit for it, all this, all that. But you're like, fuck it, this is working for me. I'm sticking in my own lane. And at the end of the day, that's the trader that I always wanted to be, that I still do want to become, is like, I just do my own thing. I got my view of the market. I don't care what you're doing. I'm in it for my own. I make my money. I get out. And with that being said, just give us a little introduction and where trading fits into your life at the moment.
All right, for sure. And you know what, guys, real quick, sorry, I'm going to put these headphones on just so. Yeah, guys, my name is Zach. I'm from Brooklyn, New York. I've been trading for a little over 4 years now. I also got lucky like you guys, and I found the Black Shirt Club pretty early in my journey. I was trading crypto for a little while. That's kind of how I got into it, like April 2021 we're talking. So I was trading crypto exchanges, like 100x leverage off of Bybit, losing money, that whole thing. And then eventually, just naturally, I find Forex because of prop firms. So I wasn't ever trading Forex on its own. It's like I found prop firms. And at that time, Forex prop firms were the big thing. Like not many people were trading futures yet. Found Austin, got into the Black Shirt Club, and yeah, I've been there ever since. But as you said, I've always done my own thing. Like I tried using VWAP a little bit, tried using like the A1, the A2, and the strategies are great, but I don't know. Something else spoke to me. I trade a little bit of ICT with a mix of volume profile. And that's just a strategy that I've kind of formulated on my own from spending probably at this point, at least 1,000 hours watching YouTube videos on technical analysis, like just being absolutely obsessed with it, trying everything, and then just stick. Those are the two things that stuck for me. And yeah, I definitely caught shit. I think nowadays I'm getting a lot less shit. I think I'm almost converting some people in the group, which is pretty tight. But dude, I took shit for sure for a while, and just bit my tongue.
Do you think it was warranted? Like when you would be taking a 5R trade and you'd get it would edge you to the tick, and then it would like you take a break even on it.
That is, I think now with the way I'm trading now, that was absolutely warranted. That was 100% warranted, because while that type of style works, man, it's like I was actually watching I think it was Chart Fanatic, some YouTube video of a guy talking about his strategy, and he was talking about this. He was like, okay, you're a high risk reward trader, low win rate. That's great. If the math works, it works. But you have to remember, if you are going for a 1 to 6R, right, and you take 3 losses or even 4 losses before you get that 1 to 6, what did you really get? You got a 1 to 2. And when I heard him put it like that, it's like, okay, how about I just go for a 1-2 or a 1-1?
And then you get
And,
less and less.
And then I just kept going lower and lower. But yeah, so maybe that's a little warranted.
I would love a little theme of this episode to kind of be about the seasons of trading and like the growth of like different seasons, because when I first met you, I was trading out of my work office in a small little cubicle with like cans of tomato sauce behind me. And I know you were working your job like fucking, I can't take my break in time, can't take my TP, and like how did you navigate moving strategies? Because like in some way, all of us have kind of just finished navigating, like finalizing strategies, editing strategies. And I feel like there's just a good conversation here about like the growth and when you know how to move on and kind of just that timeline.
So you're asking like how I knew when I had to start tweaking things?
Yeah, like what made you want to start tweaking things, because you were making money with the high RR trading?
Yeah, so no, it's a good question. So I think it's a couple of things. I think number one, I think part of it might be the volatility that has increased so much in 2025. I think last year even, and especially 2 years ago, I used to be able to use like 50 tick stop losses on NQ, which is really tight stops. But I felt, even though it was a tight stop, I had a pretty good amount of room with that small stop loss. And then once 2025 came in, a 50 tick stop loss can get hit in a single 1 minute candle back and forth over and over again. So I started naturally having to increase my stop loss. And I don't know, I think one part was the volatility, but another part was I started to get into a rut with my trading. You know, I had a pretty good run last year where I made a decent amount of money. For me, it was huge because I was also still working full time, and it was great. But then I hit a rut for like maybe 4 or 5 months. It just was not working anymore. And once something isn't working for that long, you naturally just start thinking, okay, I have to change something here because I'm doing the same thing over and over and over again, and it's not working anymore. So you just start to tweak. You know, I just started tweaking. I went to a 2R. I went to 2.5R. I tried 1.5R. Then I went to 1-to-1s. Then I went back to 1-to-3s for a little while. And eventually, you know, you just keep going until you go, you know what, this is working right now. And who knows, maybe because I'm trading negative risk reward now, maybe a year from now, I'm not doing that anymore. Maybe, you know, I think negative risk reward is really great for prop firms specifically because you have trailing drawdown, sometimes intraday trailing drawdown. I think they really reward a positive equity curve that is more stable because of the tight restrictions. Whereas with a personal account, I don't know if I could confidently say a negative risk reward strategy is the best move. I think that a positive R multiple strategy might be a little better, like 1-to-2s or 1-to-1s even. So I think it all depends on where you're at, what you're trading, what asset you're trading, and also understanding like the market shifts, like volatility changes, market regime changes. You might have to adapt and change with it.
Any of this resonating with you, Christine?
Oh, for sure. I think you're a really good example, Zach, of someone that's like had a really good evolution of their strategy dependent on the market changing. And like you've been training, how long have you been training for?
A little over 4 years now.
4 years. Yeah. So you've been able to see the market switch up, and like we hear about it as newer traders all the time. Like you're going to go through these seasons where the market just is acting differently. There's less volatility. There's more volatility. There's certain presidents in office. There's, you know what I mean? Like all these things do affect the market. And I feel like the way that you described kind of adjusting your strategy is a really good example of evolving your strategy with the changing of markets. And I love that. And like going back to what Thomas said in the beginning, like when we all met in the Black Shirt Club, right? And it was very like, I would say this might be one of the cons of being in a group. One of the like, I think there's only two, and this is one of them. And is that sometimes you feel like you should be trading the strategy that everyone is trading. And sometimes, and what I've come to believe is strategy there are different strategies for everyone. You have to be able to find the strategy that works for you. And sometimes that takes a while, and it might not be the one that everyone else is trading in your group, but you have always been the one that's trading different. And but now, like fast forward a year and a half later, there's in the Black Shirt Club, there's multiple strategies that people are trading,
Yeah.
which is actually cool to see. So it's kind of like, I don't know if you inspired the change, but maybe you did. And it's been good, like for people, well, like for me, that has changed from VWAP trading to know that there are other people out there trading something different that's not just what your group is trading. So that's always been nice that you've been in the background kind of talking about your strategy specifically. And you're always so good at answering questions. If anyone's ever watched you on live stream, like people, I swear, we all ask you the same questions. Like, what is an
How to
SMP
find an
divergence mean?
APOC.
Yeah. Like, I swear we've asked you that 1,000 times and you always answer it, but you're really good at that.
Zach was the professor in his previous life.
Yeah, seriously.
Giving lectures and all that stuff. Like he definitely breaks down. But I do, to add to that, I do love how, like, you know, since the three of us have known you for the same amount of time, the last 2 years, and how to watch you still use your same technical analysis, evolve that analysis, and just adapt your strategy to work what works for you. And it's how you kind of took those payouts last year. You were on a tear, and then you went into that rut. And we all remember the rut. And then all of a sudden you came out of this rut, and you know, you had the great news that you guys were expecting. All these things were changing in your life. And for some people, they look at those as negatives, and they're going to be like, shit, now the stress, the pressure's on me. We're expecting that we're doing this change of life, or I'm going to go to trade full time. And it just goes to show that, like, you know, you had the perseverance to push through all that, and now you're back being successful again. But it just goes back to saying, like, if you're not, like Christine, if you're not feeling a strategy, you don't have to I don't even believe you have to prove it out that it's not your strategy. If you're truly not feeling something, you should just, your mind and your body is telling you something for a reason, right? And just to watch you adapt into now your new strategy, but still that same, you know, your ICT concepts with your volume profile, none of that has changed. You just have a different approach to everything and how you're going to execute and everything. So it just goes to show that you can still have all the same technical analysis, look at the markets exactly the same, but have a different strategy and be like successful. And like you said, in a year's time, who knows, you might go back to being 2 or 3 R. But I remember you going from 4 to 5 R, then dropping to 2 R, and then you were starting to win your trades at 1.5 R, and you're like, shit, this is good. Like, I'm winning this much. Let's go for 1 R. And then before you know it, like, you adapted to what the stats told you and what you were doing well. And here you are having the best year of your trading so far, right? And we're not even done the year yet. We got 3 months to go.
Yeah, definitely. And thanks so much, all the kind words, guys. I want to touch on one part that you just said, Randy, which is, for me, I think it is cool to talk about the fact that I changed the way I execute, but I did not change the concepts that I analyze price with. And I think that is a good example of the strength of a way to interpret price action. There's many different ways to interpret price action, but I think when you have a good one, you don't need to completely flip the script. You know what I mean? You can tweak and bend things in a way that works for either your personality or the market conditions, whatever the case is that it needs to be tweaked. But if you have a really good foundation on how to actually interpret price action, I think that's the key. So once you find that, I think you know it. You know, for me, I just knew it. Like, I was like, this is what makes sense for me. This is my language. Just like Bookmap is a different language to see the same stuff. This is my language for it. This is it. I don't need anything else, but maybe I can tweak things.
I'd love to get your take a little bit on like your mental game when you're trading, because you've always come off as a very, very technical based. And it's like, I'm thinking about when you come to the desk, like I'm sure there are a lot of people when they get to the desk, they're thinking, today I got to stop adding into my losing trades. Today I got to start adding into my winning trades. Today I got to stop dragging my stop loss to break even. Is that kind of stuff going through your head, or are you more approaching the desk of like, I've got this one goal in mind, and it's to just reprice and execute a clean thesis?
Yeah. So for me, I don't have those conversations as much day to day now because I execute the exact same way every day. But I do think that for me, analyzing price is the most important thing. If you can read price, everything else will begin to fall into place. Like your psychology will fall into place if you have a trading model or a way to interpret the price action, some type of concept that makes sense to you. That's when things will fall into place with psychology because you feel like you can trust what's going to happen. And when something does happen, you go, it makes sense why that happened. Even if I was wrong, you can go, okay, I understand that. It's not just like, that just threw me for a loop. I have no idea why that happened. You know, it's like, okay, I was wrong, but I see it. I see it now. I get it. Now let me try to be ready for that the next time. So I think for me, I am very technicals based. Like even on my YouTube channel, like all I do is talk about technicals. I don't talk about like the profitability, abundance mindsets. Like that stuff is cool, but I'm just not that guy. Like I just nerd out on the technicals. And I think it's all I've needed. Although psychology is really important. I mean, it was really tough for me in the beginning, but and I still mess up from time to time, but once you start feeling confident in the way you execute, I feel like that kind of just goes away. Never fully goes away, but you know what I mean? It quiets itself.
You can just own your mistakes with confidence, right? Like you can own,
yes.
You can own it. Like you had it last week where you blew some accounts and Zach just straight up on stream was like, hey guys, this happened last week and I blew these. Like you owned it with confidence because you knew you made a mistake. You had X amount of drawdown, you made a mistake, and that was that, right? There wasn't like, oh, I lost my accounts because I looked at this differently and I should have done this differently. No, I lost my accounts. Here's why. Like, do you know what I mean? Like it's just, you own those mistakes and realize that the market can be and will be random at times. And if you're not prepared for it, it'll get you, right? That's just the way it is.
Yeah, absolutely.
I love how you explained like finding the right strategy and how you just said that, because I feel like that actually just encompasses like how my mind felt when I switched to what I feel is the better strategy for me. And it's like I understand. I think I understand price better with how I'm trading now, because for me, if it reacts at a certain level, okay, it did what I was thinking it might do. And if it didn't, it means it was just a failed, like it's not within that range, and we know that markets range, what is it, 70% of the time, and 30% they don't, or math that out properly. But yeah, I love that you said that. I do, like, before we go crazy off of it, I do want to talk about risk to reward. And I think it's a good conversation with you because you've but you've done both sides, a high risk to reward and then a negative risk to reward. And I heard Thomas on stream today and I was kind of like half hearing it, but you mentioned something about risk to reward and how it was like, how to you it mattered. And I also feel like it matters to me in a way that I didn't understand before. Before I just thought, okay, risk to reward, 1-to-1. That makes no difference to my trading. I just either get that or I don't that day. But now I am under the belief that certain risk rewards will matter to certain people, and they could be the make or break for someone's trading, because it's like a bit of a psychological level, like, thing as well. So probably not making a lot of sense, but Thomas might be able to chip in if he understands what I'm getting at and like talk about it more, or Zach, like talk about the difference between the higher risk to reward, like mentally, not just the fact that we know risking 1 to 4 or 1 to 0.5, but like the mentality behind it.
So do you want to go, Thomas? I can go.
I can't say I fully understand.
I know.
I get we're talking about risk reward, but I don't know what about it.
I can I think I kind of get what you're saying, which is, I mean, at the end of the day, there's no right or wrong way to trade, and there's no right or wrong risk reward. It really is all just math. Like if you operate with a 1 to 3 risk reward, you need your win rate to be above 18% to break even. If you operate with a 1 to 2, you need your win rate to be above 33% to break even. If you do 1 to 1, it needs to be above 50%. The math will math itself out. Then you just need to find out what either makes sense for your personality and or how the current market regime is trading and what is more optimal for that type of market. Is that it?
Yes, it is. And I guess I can maybe clarify for Thomas, because what I found was that I did not operate well with a negative risk to reward. And partly because when I would have, and maybe because I'm still a new trader, so even like my win rate in general is not uber high. Like I'm not at a 70%, you know, like even on my best times of trading, it might be more like 55%. But when I was operating, and I know that that would make me not a profitable trader, but day to day, when I would see that my losses, like I could hold out for an entire loss, right? And it would be bigger than my wins. That,
starting to understand where you're
yeah, like that made a difference to me mentally. Like I found it harder. I found it harder to come to the next day and think, well, even if I take a win, I'm not going to make back my loss from yesterday. Or even if I took a second trade on that day, I have to try to change my mentality to realize I'm not going to get green on this day anyways, because I'm at a negative risk to reward. And like that, I struggled with that, but I didn't realize that until I moved to a higher risk to reward. And it was almost like an immediate, like, oh my gosh, I like this better. Like I didn't sweat the losses. I felt like okay with my red days. I like, there was just all this mental change that came with that I was not expecting.
I think I remember what I was saying this morning. I was saying I think Austin does well with negative risk to reward because he has so much experience and confidence in his read of the market that he doesn't care if he sits in 15 points of drawdown for 3 points of profit. And that's fine, as people are going to make money that way. And what I was comparing it to me is like my whole trading career up until now, my number one biggest account killers till days is big losses. And specifically bigger losses than my wins. So that is like the number one surrounding problem. So if I were to double down on that and be like, I'm going to make it work, I feel like I would just be doubling down on what's not working. So that's personally why I moved away from it. But as someone who's now like looking at it from like a third party, I think the more experience you have in trading, the better you do with a negative risk to reward because you care less about the runners, you care less about the drawdown, you care more about the green days.
Dude, I was thinking the exact same thing as you were saying that. And this is the first time that was like a revelation just now as you were talking. I think that's true. I think I would never recommend a negative risk reward strategy to someone in their first year of trading. Just thinking about it now, I totally get that. I think going with a minimum or 1-to-1, but ideally, like if I was giving someone a brand like who's brand new, I think I would be saying like go for 1-to-1.5 or 1-to-2, because psychologically it is so much easier to take that smaller loss and know that if I get that next win, I'm still up. Like it's just easier to deal with. I think getting into those lower time frames and doing the negative risk reward thing, I think that's a great revelation that you just had me make, Thomas. I think it is better for people with a little more experience. Also, if you give someone that doesn't read price action correctly, and you tell them to trade negative risk reward, they're just going to take a million losses. Like
for sure,
you know,
that's
what I mean?
When it's like I'm scalping. I'm busy. I'm a scalping session right now. But one more thing, because I have stopped thinking about risk to reward, but I still think about it, but in a different way now. So with my add-ins on my trades, I'm now thinking how many points in contracts am I risking? And then how many points in contracts did I TP with? And I'm trading about a 1-to-1.5 risk to reward, but it's like a 1-to-1 model where I have an add-in and then I drag the stop to the next level of structure. And I'm basically risking about, let's just for easy numbers, I'm risking 10 contracts with 10 points and I'm TPing at 10 contracts at 15 contracts with 10 points. So I'm like making double, or like I'm making 1.5 what I'm risking. And that's like where I'm having like a higher RR multiple trade. but not necessarily needing more length of the move. Because something you said, Zach, when we were in the live room the other day that really had me thinking was, what percentage of the daily move am I trying to capture? And a lot of the times, like, it's between 15 to 30%. Monday, I captured 50% of the daily move. And so I realized, like, I'm not willing to essentially fall off the sidewalk, take like the sweep trade. I'm not willing to take that because I know I'm going to take more losses, maybe lead to more tilt, but I am willing to add into my trades that are working and try and capture the same portion of the daily range, but with more contracts.
Yeah, no, I totally, I like that. And even like on just this whole conversation about this is like the last 2 days, or not today, yesterday, and today's Thursday. Yesterday and Tuesday, I took full losses in my copy traded accounts, and they were both like $9,000 loss days. And everybody, the amount of DMs I got, and people just being like, holy shit, like, you okay? Everything okay? And I had to explain to them I was trading 178 micros, basically 18 minis across these accounts. But I have a high enough win rate that if I take like, I got to remember those $18,000 in losses are not going to, it's not going to be like over, like I'll make that back over now. It'll take me, because I'm a negative R trader most of the time when I'm copy trading. So it'll take me 3 or 4 days, but I won't have, do you know what I mean? Like, I have to remind myself there's such, like, where before I'd just be like, fuck, I'm never going to get out of this hole. Like, this is terrible. Like, I look at this red day and it's like, here we go. Like, here's the start of me torching all these accounts. And go ahead.
I want to ask Zach, like, do you know, like, I know you've been on a green streak, so like on your red days, how many days does it take to kind of build that back as a negative R model?
It's a great question. So it first off depends on which accounts I'm trading, because I mean, I blew them now, but the Tradify accounts that I took, I think it was like 6 payouts. I brought them up to a pretty big balance. I had them at like $10,000 of static drawdown at that point.
Yeah.
So with that, I would usually be stopping if I was down like $2,000. I would just stop. Now it was Tradevate, so I didn't have any risk settings in there, but I was able to stop myself at that time, and I would just stop at $2,000 because that's like 20% of my overall drawdown. If it's a newer prop account, like I was just trading some TOF accounts, I set a daily loss limit, or even these new Tradify accounts I have as well. I have a daily loss limit built in. Right now, this may sound irresponsible, but with the way I'm trading, that's my loss limit with negative risk reward. So it's I'm trading 5 50Ks with Tradify at the moment. So that's a like $1,200 daily loss limit where I'll get stopped out. That's my daily loss limit. And I'll just deal with it because I do know that I can get that back in maybe 2, 3, 4 trades. I can take those 2, 3, 4 trades the next day. It depends. When I've noticed, and this is just a way, like my style, I guess, when I'm up and doing well, I'm very good at just taking 2 trades, my base hit, done. When I get into drawdown, I do turn up the volume a little bit. I want to get out of drawdown. It's just the reality. But this is what made me love negative risk reward is I can do it. I can, like, with negative risk reward, if you need to, there are multiple opportunities every single day. If you're looking for 30 ticks on NQ, do you know how many times you can get in and out of the market, capture 30 ticks with a wide ass stop loss? Like, you can do it. You can do it a lot. So I'll turn up the volume sometimes when I'm in drawdown. Maybe it'll take 2 days. I think with the TOF accounts, I hit a $1,200 daily loss limit. And then so I had $800 of drawdown left. It took me 2 days to get them back up to the original balance.
Quick question. I'd love to hear your opinion on this. So one thing I do with those copy traded accounts, I take 1 trade a day. It's just a rule I set so I can keep myself out of trouble. Do you think being a negative R trader, I would find more success cutting my size in half and giving myself the ability to take 2 trades?
I think so. I don't like the 1 trade a day thing for my style. I don't like it because I just think sometimes your first trade of the day sucks.
Every day this week, the first losing trade was a loser in my copy traded accounts. And then in my other bucket of TOF funded accounts, I nailed it, and I got that account. I'm $200 away from a payout in it. So
I mean, that's awesome. So maybe it works for you and you don't need to do anything. But
no, but
me,
what I'm saying is, but I'm still taking those big, like all my money maker is going to be the copy traded accounts.
Yeah.
This other bucket of TOF accounts is just to have a separate bucket of accounts. But now it's like I'm at this point where I'm debating: do I split the 40 copy traded accounts into 2 buckets, or do I maybe take, listening to this conversation now? I never actually thought of this because I'm one of those people that I have to be rigid on my rules because I think it kind of keeps me in my place, but I can be too rigid. So I'm not being flexible in the sense of, I just thought about it as we're talking. I'm like, if I'm trading 5 micros in an account, why can't I just trade 2 or 3 and then take 2 trades? So then I have the chance, because something I do well, and I know I can do well, is when I get into drawdown, I can usually end the day green, right?
Mm-hmm.
Like I can usually come back from it and find another trade, but I'm so trades 2 and 3 for me lead to tilt. Like my tilt doesn't go further than 4 trades because I've blown everything up on 3 and 4. I don't take 10 or 15 trades. I just go balls to the wall, right? So I have risk settings in place to stop me from doing that. But that's kind of where I came up with the 1 trade a day rule. It's just so it's like win or lose, you don't have a choice.
So I heard, sorry, Thomas, but shout out to Lauren. Is he said one time that 1 trade a day is the goal. Doesn't mean it has to be the rule, but if you make a first, like let's say your first trade is green and you're up for the day, call it a day. Make that your 1 trade a day. But if you take a trade and it's a loss, like I've seen you claw your way back many of times, and I don't think it's like a bad thing, especially if you're going over to another account and then you're getting your green trade. The other thing too is Lawrence operates on a 1 to 2 risk reward ratio. So he can take 1 trade a day. He'll take his loss. His red days are always going to be less than his green days. And you know what I mean? Like it is
so
different.
That's 100% what's dawning on me right now, having this conversation. And really, it's kind of like the aha moment for me is I'm a negative R trader, especially with the copy traded accounts and the trailing drawdown. I just take green when I see green. There's just no ifs, ands, or buts about it. I'm trading 37 accounts. Like I don't need to look for 2R and lose accounts on trailing drawdown because I can't manage to, you know what I mean, watch the P&L in every account to see where I'm at. That I just know that, hey, if I capture this, I stay within my rules with Apex to qualify for, like I have a few things for just qualifying for a payout that I got to remind myself that I, instead of micro scalping. But now it's like I've never thought about it in the sense of being a negative R trader and then just now I have had $18,000 in losses in 2 days. Great. I can win that back in 4 days, but I could have gotten both losses back both days if I just took a second trade in those accounts. So I'm actually going to cut my size in half. So I'm not just taking on all this extra risk and having $18,000 days. Like I might still have a $9,000 day, but it would be 2 losses.
Or here's another idea is start marking up your first trade of the day and don't take it. That's what I did for a little while.
I can't
Why?
do that.
Your first trades are red all the time? Like,
I gotta take the trade.
Trade.
My fingers are itching. Like I just gotta pull. Like I gotta do it. I can't. I try so hard. I'll try that. I'll try my best. But then I'm gonna throw my computer out the window.
I like the idea, Randy. Give yourself two bullets. You know, 2 shots.
For sure. I think that's like a for sure. Give yourself 2 bullets. Yeah. Well, I would love to. So I had a conversation with Stephen Goldstein about coaching and whatever one time, like a month or 2 ago, and he talked a little bit about liquidity, but he didn't really go into it because I'm not in the program. With the whole sweep concept, the concept of sweeping a level, getting liquidity, like that word, I don't really have understanding of, but I know you use it a lot. And I know Christine's getting into a system where she's looking for liquidity. I would love to just understand it a little bit more as like I know it's a fundamental part of the market. Everyone talks about it a little differently.
Yeah, dude, I would love to talk about liquidity. I can always
Zach, we just brought you on for a free masterclass. So
yeah,
I'm ready, dude. I love talking liquidity.
Class is in session.
So far, I've just been saying the word liquidity. I don't actually know what it means, so this is good.
Well, here's the thing, Christine. I may not know either. All I know is what I interpret liquidity as works. Like, I don't really care if it's the real liquidity. They're like, oh, you don't know what liquidity is, bro. I'm like, dude, I don't know. This is what I call it, and I made 40K last month. So like, I don't really care. But no, for real though, the way I interpret liquidity, the way we're taught in ICT is very simply old swing highs and swing lows. Why do we think that there's liquidity resting above swing highs and swing lows? Because that's where people place buy stops and sell stops. Like it really is that simple. And then we can organize liquidity in different ways. Like we can look at the Asia session or the London session, and we could consolidate that and say, okay, this is a liquidity pool because there are other people who are looking at the Asia and London session and going, okay, I'm short since 10 p.m. last night. I'm going to put my stop at the high of day, which happens to be the Asia session high or the London session high. So we use liquidity in the form of session highs and lows, London and Asia session, also New York session. And we use it, for me specifically, I like looking especially at equal highs and equal lows. So double tops, double bottoms, and they don't have to be perfect to the tick every time. But, you know, if you see like a bunch of stacked lows, like a staggered market, right, that was really choppy for a little bit, pops back up, that type of thing, you have a bunch of stacked lows underneath. Most of the time, there's just, if we consolidated for 2 hours and just went like this in a zigzag pattern, up and down, the reason that we were consolidating is not because there was no one participating in the market. It's actually the opposite most of the time. There's actually a lot of people trading in that market, and they found fair value. So most of the time when the market goes into an expansion mode, people don't realize this. It's actually often lower volume. There's less people participating as price is free falling or moving up. So there's a lot of resting buy stops and sell stops in that consolidation area. So that's like the theory behind it. And we look for price to go from one liquidity pool to another. That's like the ICT logic, is that the market is always at one point. It's just, and this goes back into like how people would look at Bookmap. You say, I'm targeting these orders above here. You're already subscribing to that methodology or that ideology that the market is always just trying to eat up orders. That's all it's ever doing. So we use them as ways to target price, and you can also find reversals there. But that's really what it is. We organize it with Asia session, London session highs and lows, and then for me, like equal highs, equal lows, and then fair value gaps, which are those imbalances in price.
When you said liquidity pool and you said, like, I'm just imagining a small consolidating Asia session, is the pool the range or just the high and the low?
The highs and the lows. Because that's where the most logical stop loss placement is, right?
So then now I'm just sorry, can I jump in quickly because I don't want to get too far off this as talking about it. But so now, like, because we've had these days now in the last few weeks where we get these choppy days where you get it where price consolidates. You had it earlier today, and then we got the short breakout. When you're looking at that and you have a liquidity pool above and below, how are you building the bias for the direction once one of those liquidity pools gets swept?
So are you saying if we're in the middle and we have either the high or the low hasn't been taken yet?
Like you have stacked highs and lows.
Yeah, gotcha. Great question. So for me, this is really where volume profile can help me out, which is the other component of my model. You know, I could look at the golden rule, which I like to call, which is if we're above the previous day's point of control, I'm going to have an easier time looking for longs. If we're below the previous day's point of control, I'm going to have an easier time looking for shorts. That's one potential thing I could be looking at to determine which direction we're going to go if there's two liquidity pools. Another thing is just other confluences, right? Like, so maybe, there's Asia high liquidity, and then there's also some equal lows below us, but maybe the equal lows below us also have a large imbalance, like a large fair value gap right beneath it. Then, you know, it's really just like stacking confluences. I can go, well, there's more reasons for it to go to the downside right now than the upside. And maybe that's where I like to use inversion fair value gap entries, right? So maybe we get the inversion fair value gap entry model to the downside. Now I have three things outweighing price going higher. Maybe we're overall, like we've been consolidating for a few hours, but we're still in a higher time frame downtrend. So it's going to be easier to go for short. So I could lean into that. It's about just stacking confluences for me, at least.
That makes a lot of sense. No, because I actually, took the short just before the podcast here when you were looking at that, when I was waiting for price to break down, when all day all I could see were the longs as price consolidated up at, the overnight VWAP. And then you had that short, and then I started looking at it, and it just kind of made sense to me. And then I saw that break down, and I took a short anyways. And yeah, I passed some Apex combines in the process, which was
Nice.
which I was so fixated on the longs though, right? Because my losing trade today was a long. So it's like I need to see this long
That's a
play,
real thing.
right? I
That's
need
a
to see
real
this.
thing.
I need to be right, and I need to see this long play out. And here we are sitting up. Your price structure looks great for on the lower time frame. Price structure looks great for a long. But when you actually think about now, when Zach says the higher time frame, how's price been trending? We've been in a downtrend. Because I was wondering how you got to that theory of that 5-minute fair value gap. If this gets taken out, I could see this break down. And then I started to look at it, and I'm like, actually, there's something to this, right? So
Yeah, see, so that's a good example. It was the we're in the higher time frame downtrend. We're just like insanely bearish when you zoom out a little bit. So, that was a lower high. And I go, this just makes sense. This is my line in the sand. If we go lower, I'm going short.
Yeah, and like literally today when I got on stream with Randy, I was thinking about the levels. There was and like this, I've started to use levels in the equal lows. I found equal lows today. There's an equal low from Friday, September 12th on ES at 66.3150. It was perfectly lined up today with opening range low and from back there. So I told Randy, I said, this is going to be a great level if we sweep it and then reverse. We ended up not getting the sweep. We just got the sweep like a few minutes ago at 2:04 East time. We just got the sweep. But I took the long initially, just playing the double bottom off that level. And yeah, I don't know. These concepts pay. They're very cool, and I enjoy it a lot.
Yeah, I was gonna say when you were talking about liquidity, like the levels that I'm using right now are London lows, London highs.
I was going to
previous
ask, what are you
Yes.
using? Did
So-
my interpretation make sense?
Exactly, and it actually
Yeah.
like clicked something for me because I use 4 levels right now, just because I'm newer to this. So these are the ones that I've just chosen: London lows, London highs, yesterday's highs, or previous day's highs and previous day lows. So same kind of idea, but how you just said, like, it searches for liquidity. So if price goes to, let's say, my London lows and reacts from there, reverses, essentially, it's like how you said, it searched for the next pool of liquidity, which would be London highs, maybe in this certain sense. And I've seen that a couple of times, and I think I pointed it out. I think we were on stream one time. I'm like, this happened. I'm like, oh, this might go here because I've seen it. But now what you just said makes sense. Like, it hits the one point of liquidity, and now it's searching for the next liquidity. And in that day, the next one would have been London highs. But obviously on different days, you could have different levels of liquidity. It doesn't always have to be those 2 levels. But how you explain that, does that mean I'm an ICT trader now?
no.
A little bit.
Do not say that. I'm not.
Am I an ICT trader?
Christine's not converting to ICT.
Here and there.
Zach's not even an ICT trader. Zach's a Zach trader. He's got his own system. The Arbuchi.
The Arbuchi method. No, I got to give credit to ICT, bro. You know what's funny? I've never watched an ICT video in my life.
I know. I heard you say that the
No
other day.
kidding.
Austin had Chris Drysdale on, and Chris Drysdale was saying a lot of ICT's concepts because Drysdale's been a trader for 10 plus years, and then his dad was a trader. But he said a lot of those concepts are just concepts that have been in the market for 20 or 30 years, with just different.
Yeah, they absolutely are.
Just renamed concepts. That's all they are. To make it more digestible to a newer generation who just ate it up. But yeah, go back and look at all that stuff. Like Drysdale talks about, like, gives you both definitions to each term. Like, this is what ICT says. This is what they used to say 30 years ago. Like, order blocks and all this stuff. Like, he had a whole thing for it, right? Which is, it's like, yeah. So I do, but I use volume profile now. Like, originally I started with VWAP, then I introduced Bookmap, and now I have volume profile, and I found a balance with all 3 of those. And no one can. And Austin told me a year ago when I said to him, I'm like, how can I take Zach's style of trading and your style of trading and do it? And Austin said, you can't. He said, you can't. It won't work. I shit you not. He said to me, he's like, it won't work.
Suck it up.
All I did is I didn't talk about it. I just started to put it on my chart
Yeah,
and
and he
started
always
to use it.
Guy.
I love this on there.
Dude.
And
Dude.
now Austin will ask me sometimes, like, like what are you looking at, right? And I'll be like, previous day's point of control or value, like, and it's the funniest thing. Before it was like taboo. You could not say the word volume profile.
Dude, you're telling me. But no,
Yeah.
I really think that there's no way to copy and paste a strategy. You have to make it your own. People can give you a framework and guidelines and a foundation to build your bricks on, but you need to make it your own thing. That's where the edge comes from. So you incorporating volume profile with VWAP with a little bit of Bookmap, that's your twist. Christine, you doing London session liquidity and mean reversion, but maybe you don't use fair value gaps or something, and you're using other more basic market structure.
Deviation bands. I'm really into
deviation
deviation bands right now.
There you go. So I think that's the key. You got to make it your own thing.
Yeah.
I read in a book, actually, Secrets to Prop Trading Success, the one that Austin's in, but there's one of the traders in there that does well, uses Bookmap, volume profile, and Fibonacci levels, and he even draws Fibonacci's on the chart. Then he looks at Bookmap to see where the confluences line up with his Fibonacci. I have no idea how Fibonacci works, so I don't want to butcher it. But anyways, whatever he's seeing with his Fibonacci drawing, that he matches it on Bookmap, and then that's his thesis for his trade.
Well, I've been trying to pry it out of the guests on this podcast of what does it mean to have your strategy fit your personality? Because I get it. It makes perfect sense to me. I see it. I get it. I can't explain it for the life of me, except for the fact that I've seen the pattern and I know the fucking pattern and what it's supposed to do when it shows up. And am I missing something, or is it's really just you just see it and it's your own thing and that's that?
Yeah, that's a good question, dude. I don't know if I could communicate it either, but it's just when you watch 1,000 hours of strategy videos, you see so many different things, and one of them just goes yep, that's the one. I like that one.
You see enough boner candles, no boner candle, right?
Exactly.
It's like a puzzle piece of strategy, though. Yeah, you talk about confluence, Randy has boner candles as part of his confluence or whatever. But
and I have inversion boner candles.
Yeah, there you go. We puzzle piece different things together until it makes sense to us. Do you know what I mean? I'm doing those levels, and I really like deviation bands. And when they're confluence together, it's ooh, this is what I really like. But it's you can't figure that out until you've figured it out. There is no way to explain that, right? I have no idea how to explain it.
There's such a fine line of because I know, Thomas, you talk about this a lot. By the way, guys, I've listened to almost every one of your podcasts.
Really?
Yeah.
I'm not even kidding. I'm a genuine fan. I've listened to almost every one. I love the dynamic you guys have. I love the where you guys are at is so unique and refreshing compared to other people who make podcasts and pretend they're millionaire. I love what you guys are doing. But
New favorite guest.
So I know that you've talked about this a lot, Thomas. You're worried about strategy hopping, and I get that. I think there's such a fine line between changing up your strategy once a week and also not changing it and not accepting it. And there's no easy answer. There's no easy answer.
That's what I found this year is it's so much trial and error. And I am this last month and a half has been my favorite period of trading I've ever had. I'm just trading so much differently than the old scared version of myself. And I know I know Randy can hear it in my voice when I'm talking on stream. I'm just such a different person now and a different person at the desk that it's really refreshing for me. But that just came from literally months of feeling like shit after I traded and just being frustrated, being in the rut, being in the struggle, taking fucking weeks of red, trying to change up my strategy, and taking weeks of red, losing the confidence, but then sticking with it. And that's for me, the biggest thing has been sticking with it. Whatever change I did implement, I knew it was the change that I was supposed to do. There's this quote from Jordan Peterson that I really like. He's nobody knows what they're supposed to do next, but everyone has that feeling that you have that inkling of this is probably what I should do, even though it might be the scarier thing. And I've just been choosing to do that and then sticking with it. And that's that's given me the success that I've been looking for with the change, and like to not feel like I'm strategy hopping where, yeah, there is like a little fear. Oh my God. I was like writing in my DRC yesterday. I was so scared to move from the 1 minute to the 2 minute because I thought I was going to lose my entry price. This was so real, so real. I thought I was going to lose my pattern recognition, my entry prices, all of this. Now I look back at the 1 minute, I'm like, that looks fucking awful to trade on.
2 minutes
I don't
for
want
life.
to touch that with a 6-foot pole. That's like, it looks like there's so many decisions. And then now I'm entering on the 2 minute and just flicking over to the 5 minute and just watching it on the 5 minute. And now I'm like, I barely even go to the 2 minute. And I'm, oh wow, there's a 5 minute entry at the same price as I got in anyway. Like I'm just like losing, like shedding so much of the negativity around trading through this podcast, really, which has been fucking awesome.
Yeah.
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 Yeah, but well, I mean, I guess to end, I'd love to ask how you perceive expectations / goals in your trading, and like, do you set them? Because I found expectations for me have been quite a negative thing, even though it feels good to have an expectation or to set a goal. When I don't hit it, it just feels that much worse. So how do you fit that into your trading?
Yeah, it's a great question. I think, Thomas, I think me, you, and Mark were briefly talking about this, some form of it in the live chat like a few weeks back. I think expectations in trading they could go so wrong. They could go so wrong, and they can mess up everything. And I mean, personal example, this year, last year I had my first profitable year. I made 54K. I talked about it constantly. This year, the goal was 100K in prop firm payouts. That was the goal. I was like, there's no way I'm not going to make this. First couple of months was doing pretty good, like just chugging along on towards the goal. Then 4 months of just shit. And every month it got harder and harder psychologically and mentally because I started counting each month. Like now to make 6 figures this year in trading profits, I need to make X amount per month. And you drive yourself crazy. And finally what I did was I just completely stopped caring because it got so bad, man. I hadn't gotten a payout for like 3 months. I was just struggling. And I just said, I got to just like detach from the outcome here. And everyone says that. It's hard to do it in reality, but I just actually did it. And I think one of the keys for me was it's not like it changed overnight once I detached from the outcome. I still sucked for like another month, but I just continued to not care. And then it just started to pick up. And like now I could definitely reach that goal. Like I'm not too far off now. And but if I don't reach it, I don't reach it. I'm just doing what I do. And I think, I think expectations are really tough. Maybe 5-year expectations are good, like long-term vision plans, and you work towards that slowly brick by brick. But I think like monthly expectations, yearly expectations, I think it can really set you up for failure. It did for me.
I feel like there's been a bit of a theme of advice, and I actually would like write this down on like advice that you would give to new traders now, because I've heard people say it in different ways, and it's basically care less. Like give a shit like less. Don't care about it as much, which is crazy. Like what kind of advice is that? But it's actually true and it works. And like I don't know
how. It's like in here. It's like in here you have to somehow care less in here.
Yes.
Because if you're scared right before you press that button, if you're scared when you have to press that button, it always goes wrong.
Yes.
When you enter the trade and it goes a couple ticks in drawdown and you're immediately like stressing over it, that trade's gonna hit stop loss. Like there's something about the energy. It just is. You just gotta not care.
Well, if you enter a trade and like you're like, shit, this is gonna be a losing trade. It's a losing trade. Yeah. How often is it like you enter a trade and you're like, fuck, this trade sucks. It's a losing trade, and it turns around and wins on you, right? Like I remember hearing that, and it's like the market's just waiting for you to put that energy out there that like you're not confident in the trade. And you're not confident in it, you're gonna mismanage it, or you're gonna get stopped out, right? So definitely something I just struggle with, I think, and I'm always trying to evolve and evolve and evolve. So I put a goal to make $1 million this year, like from everything, and I realized I was writing it down every day on my rules that I signed a little contract, and I was just like, why am I writing this down? Like, why am I expecting that I have to do this? If I made $100,000 this year towards my $1 million goal, is that like a bad thing? No, that's like fucking amazing, right? So it's like, you can have unrealistic goals. You should. They're good to keep you motivated, but you shouldn't expect that's like the line. Like, you have to make this goal happen. It's unrealistic for a reason, but doesn't mean that you can't make it happen or get to that at some point. So,
I want to share, just to close up the pod, something that Tanner Owings, he talked about a coin in the bucket. Every time you have a good day and experience, coin goes in the bucket. I reinterpreted it for myself a little bit of having a daily goal where I have like a box and I drop a coin in it every time I have a day of good process. And it's been every day. And since I started doing this, and it gives me such clarity because the only goal is to show up and execute the trade following my process, which is, at the end of the day, that's what I need to do every day to get paid. But if I lose sight of that, that's when I tilt. And so this little game I've created takes it off the money. It takes it about, if I get the coin in, because if I tilt, I have to take a coin out. So the only goal is to just stack the coins, and then it's like also equivalates to the P&L and stuff. So that's like, that was just a little thing that I did to really help my day-to-day like energy when I come to the desk. And when I leave the desk. Yeah, my ending tidbit.
Yeah, love it.
But yeah, with that all being said, Randy, Christine, anything else you guys want to say?
No. Thanks, Zach, for explaining things that we should have probably already knew about liquidity, but I appreciate that.
Okay, it's what I'm here for. Tune into ASFX TV. I'll explain the same things over and over again.
Yeah.
Cool deal. Thank you for listening, everybody. And,
thank you so much, guys, for having me on. It was a pleasure.
Thank you.
Cheers, everybody. Have a great trading week.
Peace.